Time for the Tesla and Palantir weekly update. Also going to include some other stocks too, so stay tuned for those. But starting off with Tesla, we can see that price has no change from last week. The only change really was it hit the 786 resistance, the 347.58, and it's still above the 321.32. And if you remember all the confluences of support I talked about last week, well, we can add them on again one by one. The 50-week moving average still above the cloud, and we can talk about the Ichimoku cloud right here, which is the conversion line, the bottom of the cloud. Actually, yeah, the conversion line is right here at 323.16. The bottom of the cloud is right around 313. The 50-week moving average 314. The baseline 290. The 618. All of them, it's above everything, right? And then we can also add on more confluence as well with the bull market support band again. And what do you know? It's still above that. And we can even add on the 20-week moving average of the Bollinger Band and take that off. And what do you know? It's still a rising 20-week moving average as well. So support held throughout the week, even though people have been very, very bearish that it's going to just collapse. And in fact, if you look at this weekly candle, it still right here was up 0.91 cents. Yes, it's a red candle a little bit because it started out high and went lower, but it was a green weekly candle, right? It was up 0.91%. So this is not a bearish situation. This is something that has potential to continue. We'll just add on the Ichimoku again to continue to just build a base inside of the cloud for a little bit longer, maybe another week or so, maybe another couple of weeks. Maybe you can just exit the cloud sooner than later, and then when it's ready to exit the cloud, it can then be ready to get above the 786, then flip that to support, then go to the 886, 378, and then get a lot more bullish after that. So the stage is set, in my opinion. It's almost ready to break. We're just not there yet, right? We have that 786 fib to get above, and then we go to the log scale GAN right here, and this log scale GAN is the arc right here. Let me just take off all the other indicators to make it more clear. That hit as well as resistance, so that's still in the way. And that's right around the 349. And then on the log scale, you have the 886 fib at 353.19. So you have that as resistance next to. And then there's one final stage of resistance above, which is the linear scale GAN, the orange GAN level right here, which is at 358. So those are the stages to break, right? The 347.58. Then the arc right here. Next week, it'll be around 348. And then we have the 886 at 353.19. And then we have the orange GAN level on linear scale at 358. So those are the levels to break. And this is why we're not breaking out, because there's a lot of confluence of resistance. But at the same time, as you can see, there's a lot of confluence of support. So it's just range bound. There's no need to panic. Patience is required, because once it's ready to break, I think the excitement can finally begin to go back to all-time highs, but it's just going to require a little bit more patience. And next is Palantir, and Palantir we're going to start here on the weekly chart just to show you what is really going on. And this is the linear scale first of all, and I wanted to show you ever since it broke this blue level. I talked about it, I think, back in May right here, how it was a breakout, a back test of that zone, and as long as that 114 zone held, it's going to keep melting up higher. And that's exactly what it did. But now we're in a position that we broke out of this other level here, and this level is at 168.29, 168.30. So is this going to be the area of interest to back test at least? And I think that is a possibility, and I'm going to show you why on log scale. So let's remember that linear scale number, 168.30, and we're just going to go to Palantir on log scale, and we can just show you these set of fibs. And now these are from the February high of 2025 and the April low. So it broke out massively, and then it kind of consolidated on top of that February high for weeks, right? It just kept back testing it and back testing it and back testing it. And then it was ready to go to the 1.272, and then it broke above. And then finally, there was a big impulse move to the 1.618, and we got rejected. So I think this is something to pay attention to. The 186.27, if price cannot break above it in the weeks to come, then there is a potential to come back down to retest at least that 168 that I showed you here on linear scale. But on log scale right here, it could be 163.46, right? And there is actually more confluence around that 163.46 because if I add on the Gann square for log scale, we can see that that Gann level right here is around 160 as well. So there is a lot of confluence of support all in the 160s, from the 168 down to the 163, even down to the 160 zone. So if it did need to backtest any of those zones next week or in the weeks to come, that is a perfectly healthy development before it's really ready to break out higher. So the number one rule is if it can't break resistance, then it's likely to go back and test support. And support starts around that 168 here on linear scale, and it ends down here, down at 160. Well, technically it ends all the way down where the angle is in the 130s, but that's not even necessary, right? We'll cross that bridge if it ever starts to break below here. But yeah, if it can't break resistance, it'll go back and retest support. So I'm looking at the 168 at a minimum and maybe down to the 163, 160 before continuing higher. But if it surprises people and just starts to break this 186.27 sooner than later, then it's not going to look back and it's just going to keep going to the 200s and above. So that's going to be the really big area of interest to watch. Stay above. If it can break above 186.27, then we don't have to worry about that. But if it can't break above this 186.27, then we got to start looking at the 168 at a minimum, maybe even down to the low 160s. And next, let's look at Coinbase. And Coinbase, we do see a weekly candle close that closed at 317.55, which was below the 886 again. And technically speaking, it did close 3 weeks in a row now below that 318.95. The first week right here, it closed at 314.69, then 310.54, and now 317.55. So the trend has been this 318.95 has been resistance, but it's still not that worrisome, and I'll show you why. Because if we just switch to linear scale right here, we can see a clear pattern. And this pattern is actually something that I want to pay attention to, is this 702. And it's actually a really good development in my opinion, because this 310.94 is showing stabilization on top of it. And not only that, it's a previous big resistance back in January 2025. It's where it really got rejected for the last time before it collapsed, right? And it was a resistance here in November for 3 weeks in a row with one big bullish impulse to the 786 and then got rejected straight back down below that 310. So this 310 was a huge resistance zone that it is looking like it's flipping to support. So I think this is actually more important on linear scale than it is on log scale to pay attention to, because it's more clear with all these wicks how it was a very, very big resistance zone, and then it was a breakout zone right here back in June. And now it's back testing that breakout zone, which was previous resistance, flipping to support. So if we're going to look at any number to stay above, it's really going to be this 310.94. And then once we start building a base on top of this 318.95 again is when it's probably going to be ready to continue the journey higher. So it's just not ready to explode higher yet. And I think that's what these candles are telling us, that it's just going to require a little bit more time, a little bit more patience to break out above. And not only that, we can put on the Gann square as well. I do have one that I wanted to show you. There are some resistance levels of this Gann square right here, which is right around the 325 zone. So this is, and even the top arc was hit too around 342, right? So this is a area of interest of resistance. So it's a battle. It's a battle between support and resistance. And right now, support is winning and resistance up top is winning as well. But support overall is really winning with these previous candles. So essentially, all we got to worry about is staying above 310 and build a base, and eventually it'll break that resistance above. And not only that, we can add on the confluence of the Ichimoku, and it nailed the baseline last week. Did not even get close to it this week, so that is perfect. So that baseline is right around 293. So more confluence of support being hit down below and a positive reaction off of it too. So it's going to be a little bit of patience for Coinbase, but once it's ready to continue to break above this 318 and these 340 zone above, then I think it's going to be ready to continue the journey much higher once again. And next is MicroStrategy. And MicroStrategy, we can see that this chart is really establishing a nice foundation on the top arc right here. Ever since it broke out of the arc in April, it's been building a base on top of this arc, and it has not been really closing weekly candles below. It's been really just maintaining it as a support, and this week is no different. And now we can really determine if it really wants to continue down this arc a little longer, getting closer to the cloud, or if there's going to be just kind of one flush down to this 340 zone first, and then continue the journey higher after that. But either way, it's kind of a bullish scenario, and I think it's just waiting on Bitcoin to see what it's going to do. But that's what I'm really watching the most, right? If this arc continues to hold, then it might not need to get down to this 340 zone. The baseline right there is also around 344. So there is some confluence of support a little bit lower, and the cloud is below there too. So it could just do one final liquidity grab. But either way, this is a bullish chart, and it's a very, very healthy breakout back test of the 1.272 back in from October down to March. Then we found some stability right there, and essentially it's finding stability at a higher level too. And not only that, there was a higher high and a higher low, right? This was a higher high from back in May. So from the bottom, we have a higher high, higher low, technically another higher high, and so far another higher low from back in June. So it's not going lower, and there's no guarantee to go lower. So the trend is your friend right now. If it keeps establishing a base on top of these 360s right here, then the next step would be to continue the journey higher. And the first step to break is going to be this blue conversion line right here, right there, which is right around 408, 409. If that can break, then we'll start to see higher highs again around the 542.96, right? That's going to be the next level after that conversion line gets broken, but it could take some time, a little bit more consolidation. We're going to need another breakout for Bitcoin first before that happens. But so far, it's in a normal range and a normal consolidation process until it's ready to make its next leg higher once again. And next we have IREN here, and IREN, I want to show this because it broke out. It broke out of the 886 log-based fib at 1935, smashed right through it, stayed above it the whole week, and what do you know? So if this can really be our support now, then it has potential to keep going higher towards the 2825 and above. So we're going to keep watching this 1935 all next week, and if price can show stability on top of it, then yes, it's going to go towards all-time highs, and then maybe even the fib extensions above. But the green GAN level is at 52, and the fib extensions start at 69.72. So this could start to be very explosive now because of that 886. And if you look in the past, there really was never any weekly candle close except the very first candle during the IPO. The very first one, it closed above the 886. But then after that, this one closed below it, and the rest was history. So this is a big deal. Getting above it, staying above it, and closing above it for the weeks to come is going to set the stage to 28.25 and all-time highs and beyond. So that's what I'm paying attention to the most for IREN 1935, because the breakout and the backtest of the arc already basically happened, and now we have follow-through and the continuation higher. Stay above 1935, and it goes higher. And lastly here, I'll check out Woof for you guys. I want to just show you what's really happening with this one, and it was a massive breakout. There was a big 78% weekly candle, but the stage was always set to go higher, and I'll show you why simply by using moving averages and fibs, right? We can see that this candle right here back in June of 2025, it broke out above this 50% fib, and that 50% was 485 right here. And then it started to build a base on top of it, and then last couple of weeks, the last 3 weeks, it was really finding some stability on top of this purple 200-week moving average. And even last week closed above everything. It closed above the 200-week, the 50-week, that 50% fib, and everything. And that set the stage to explode higher. And I did tell my Patreon people that it was likely to explode higher. And sure enough, it did. So now it's at a previous resistance right over here. Back in November of 2024, these wicks could not break above. But you know what else is around there? You turn on the monthly chart. It's the 200-month moving average at 904. So we had an opportunity to establish a base and just explode higher. But now that the explosion is there, it's at a very high time frame resistance, and it has not been above this 200-month moving average since back in February of 2022. So it's been years since that has been reclaimed. So if it can close the month above it, maybe this month is the month, right? There's 13 days left until the end of the month, and if it can close above it, then it could have a clear shot to the bottom of the cloud and the 702 at 1182 and maybe 1233. But right now it's big resistance, so we'll see if it can actually stay above and get above that 904. But in the meantime, in order to get above that 904, what I'm looking at is just on the weekly chart is in the weeks to come, just try to establish a base now on top of the 618, the 816. If that's successful, then we'll see the continuation to the 1180s and maybe above. So this is a big important zone. Maybe it can be a previous resistance zone flipping to support, because last time it was here, it not only got rejected by the 618, but it got rejected by the arcs above, which was added resistance. And this time around, it just smashed right through those arcs down here, so it has really no resistance above that. So the possibility to break free of that 200-month moving average at 904 is there, but it needs to hold 816 in order to break above.